Hi, this is Mark Espy with MarketsHammer.com, also known as the Robinhood Trader. And we find ourselves on Friday afternoon, the 23rd of July, and we're looking at the Dow Jones Industrial Average. Before we begin, I must remind everyone that all that we speak about today is for educational purposes only and never to be construed as a recommendation to buy or sell anything. Well, last week I titled the analysis, Fasten Your Seatbelt, and how apropos that was when you take a look at the action this week. It was up and down and on big moves. Finally then appeared to break out of this range. And I want to point out to you this trend line. The upper trend line here actually is a neckline for an inverse head and shoulders. We have a left shoulder, head, and right shoulder. We have the peak here from June and another one here in July. And when you break up above the neckline and inverse head and shoulders, that is a significant thing. It also broke above and closed above the 200 simple moving average, which is significant as well. Although it's when you talk about major moving averages holding support and or resistance, it's not absolutely precise, but it did close above that. We have some contradicting indicators, which I'm going to point out here in a moment. But before I do, the question you might ask is, okay, then where do we go if we continue to the upside? I'm not sure that we will continue to the upside because the volume was not remarkable. I would have liked to have seen more volume as an indication of the participation of driving this up. But if we do continue to go up, a target would be 10,600, which would be the swing high from June. We have a swing high from May at 10,900, and then the April high 11,200 and change. Well, I'm talking about some contradiction, and the major contradiction that I see here is the crossover of the 50 simple moving average from above to below the 200 simple moving average, which is not an insignificant thing, and I pointed that out last week. And it's not unusual to find the index come back up to try to test the underside of this. So I'm more in the camp of believing that that's what's occurring here, is a test of the underside of the 200 simple moving average, and I believe it will hold as resistance. To give you just a bit of history on the 50-200 crossover, and it has been significant through the years, the last significant crossover was a bullish crossover that occurred in July of last year, July 2nd to be specific, and that was a follow-through from the March low of 2009, and as it moved up smartly, the moving average began then to move up and then did cross over from below the 200 to above the 200. And we all know what occurred on that move, just a massive bullish move. Prior to that, we had a 50-200 simple crossover the 3rd of January 2008, and that was coming down from the all-time high up around 14,000. And it never did cross back above until July 2nd of 2009, and that whole move down was absolutely massive, from around 14,000 all the way down to, as we know, the area about 6,600. So it's not an insignificant thing when you're taking a look at this. Now, it can whipsaw, and it has in the past. 2004 and 5. The 50 whipsawed above and below the 200 simple, as well as 2001 and 2002. The other thing I want to point out here is that we are just above a 50% Fibonacci retracement, which is at 10,334. So that could act as resistance as well. If it comes down, where's it going to go? Well, 98.35 would be a target from February, this February. 96.80 from late October 2009, 96.14 late June of 2010. 9,500 is very strong. 8,800 from June of 2009, and then 8,100. There's some good confluence, several points of confluence on a 5-year chart there. The resistance we've already pointed out. The other thing, and it's very slight, but I wanted to point it out to you, there is a very slight bearish divergence on the peaks here in the stochastics. So we have a bearish divergence as we have the move going up, and we also have a divergence in the MACD histogram moving back toward the 0 line in the midst of this up move. So my thesis is that this is a retest of the underside of the 200 simple moving average, and we're going to move back down and test recent lows. Okay, with that, I'm going to move over and take a look at the SPX.